Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Wednesday, May 24th, 2023. Before we click through all the charts, I want to encourage you to please click like if you haven't already. It helps us out a great deal in being found on YouTube. Also, become a Wicked Stocks YouTube channel subscriber. You'll be notified each and every time new content has been uploaded for your viewing, including the daily Tesla and daily Apple report. I do want to bring your attention here to, and this is an analysis that I do every day on wickedstocks.com in the Triple Q, daily analysis in the Triple Q, daily analysis in the SPY. Our subscribers are seeing this chart every day. This is just a weekly chart. They're seeing much more finely detailed formations as well on the daily chart that I'm not going to get into, of course, right now. But the point I'm making is for the last couple of weeks, the Triple Q has pushed into a zone of resistance that culminates with 340.08. The SPY has an identical channel top. The S&P 500, the ES futures, all three of them have tested to the tick these long-term channel tops. The Q is also in the process of doing so. The point I'm making is the broader market susceptible to falling off the Triple Q over the next several months back into the 299.08 region and dropping gradually. So I just wanted to point that out. And this is important information. Well, first off, I just want to emphasize that we do SPY and Q analysis every day on wickedstocks.com. Same format that you see here with Tesla, with the newsletters, the support and resistance levels, but correlating with the testing of this long-term resistance, and I don't have to remind you of this, but the market did actually test weekly channel resistance at 192.40. This is a completed objective that came into being. I'm going to go back to this chart, came into being actually back in late April when we tested this channel bottom at 147.15. Now the channel top on the daily chart is 194.45. On the weekly chart, 192.40. We pushed into the 192 handle. We tested the weekly channel top. It is a range of resistance, as I've been saying, ending at 194.45. I'm calling this a met objective and that the market is now susceptible to rotating south into the 147.15 region, dropping gradually over the next month or two. As I said a month and a half ago when we tested the channel bottom at 147.15, that the 194.45 channel top was considered a 1 to 2 month target. I'm now considering 147.15 a 1 to 2 month target. If I were to break it down into 2 to 3 week time frames, it looks something like this. I do think the 166.68 new rising 2/3 speed line that is based in part on Tuesday's high and uses actually that pullback low in late April. This should be considered, I'm going to say, a 2 to 3 week target. We might reach it by the end of next week. But I'm just mentioning that for those of you who trade options, having tested that 192.40 channel top, that was your cue to take some profits anyway on any 190, 195 out of the money calls you may have bought a month and a half ago when we were testing that support area. We also had a buy signal on the way up, as you recall, which I'm not even showing anymore. And so, liquidating that long position and now reversing, perhaps buying 168, for instance, out of the money calls, out of the money puts that don't expire for at least a couple of weeks, or 145, 147 out of the money puts that don't expire for at least a couple of months. That is the downside options trade right now, so long as we have tested and are not retesting or settling above this 192.40 channel top on the weekly chart. Here it is. Sorry. There it is. There it is. Sorry. 192.40. And on the daily chart, it's 194.45. And so below 194.45, I consider 166.68 a 2 to 3 week target where we can bottom out on a weekly basis, possibly longer, possibly rotate back into this 194.45 region within a week, 2 or 3 of doing so. We could fill this wedge out all the way through June, actually. And that's why I give this 2 full months to reach 147.15. It would be a settlement below 166.68 that would clearly indicate 147.15 within 1 to 2 weeks, where, once again, we can bottom out on a monthly, possibly quarterly basis. So let's take a look at the downside today for you day traders. 184.86 is still a relevant support level. We may bottom out here for the day and above which 194, 192.40 to 194.45 in reach again on an intraday basis. We could trade inside this zone for the day, but I do think that 184.86 is susceptible to violation today after having tested long-term resistance. So keep that in mind. And if we do violate, if we do break or open below 184.86, 180.94 is likely. That's an intraday support level. And if we close today below 184.86, I would expect 174.22 over the next few days. All of these levels only considered session containment because I'm making way for 166.68 as a 1 to 3 week objective. I really think it's more like by the end of next week is likely. On the way down, we have decent support at 184.86 that if violated, if we break or open below it today, expecting at least 180.94 intraday, we could within the day test 174.22 where we can place a daily low, so forth and so on. All the way back to 166.68, our 1 to 3 week target. I'll just say at 1 to 2 week target. So this is the 1 to 2 week swing trade, actually, being short in the low 190s now, anticipating the upper 160s over the next 1 to 2 weeks, where profits can be taken and you can actually enter a long position, anticipating the possibility of bullish rotation back into the low 190s again. And finally, closing below 166.68, prepare for a 1 to 2 week objective at 147.15, which I consider to be a 2-month objective anyway, following our test on Tuesday of long-term resistance on that weekly chart at, there it is again, 192.40. Now it would be, and I don't expect to see this today, but if we settle Friday above 192.40, and we would also, of course, need to close above 194.45, then I do think that the 211.85 long-term channel top is our next 1 to 3 week target, where we could have real trouble through the third quarter into later year. We could fall off from here in a meaningful way for through the balance of the year, and if settled above at the end of any week, 211.85 would indicate a good annual low with longer term bullish continuation than expected, not only through the rest of the year, but possibly well into next. You know, I think I have pretty much said it all for Wednesday's Tesla report. Please click like, subscribe, and I'll leave you with this image of the Triple Q. Check out our daily analysis in the Triple Q and the SPY on wickedstocks.com. It'll keep you informed of the broader market moves. And that's all I've got for Wednesday's Tesla. You have a great day.